The problem is we are still less than halfway to achieving the national goal of more than $3 trillion in export volume. And even though it is an aspirational goal, it is an important goal because in order for our companies to prosper and to hire again, they need to be focused on not just the U.S. market, but the growing global opportunities outside the United States. Many U.S. companies have thrived by focusing on just U.S. customers and U.S. firms. But the landscape has radically changed in the last 10 years. In 2010, for the first time, the big nations, Brazil, India, and China, surpassed that of the United States in terms of its share of the U.S. GDP, while U.S. GDP is only supposed to stay about the same at 1/5 of the world GDP. That means in order for our companies to expand, staying focused on the U.S. market alone is just detrimental to their future growth prospects. We are not making enough deep, sustained traction on increasing exports in this country. We are still heavily an insular market with an insular orientation. To change the dial on that, we have to move from a federal approach to a bottom-up approach. What does that mean? The administration has done a great job with Congress to pass a national export initiative to increase the interagency focus on helping firms access new markets. They have passed a series of free trade agreements to open up markets for many small, mid-sized, large firms. But the challenge now is that we are still stuck with only 1% of American firms that are exporting. To change the dial, we need to go down to cities and metropolitan areas that are the hubs of global trade and commerce. Regional leaders at the heart work with companies all the time. Regional chambers of commerce, regional economic development organizations, mayor's offices. They interact with their economies on a regular basis, on the firms that drive job growth. In order for us to get more companies into the export pipeline, we need to empower our regional organizations to be that front-facing part of the federal delivery system. In order for firms to be able to succeed on a global landscape, they need to have cutting-edge, innovative products, goods and services that can sell abroad. Regional innovation capacity is found locally. In order for them to reach those markets, they need to have modern freight and logistics infrastructure. And again, only at the regional scale do we see leaders working constantly to better integrate air, rail, freight, transit to support the increasing volume we're seeing in a trade economy. In order for our companies to continue to create those cutting-edge products that people around the world want to buy, they need to have skilled workers. And again, it's what we're seeing is local regional leaders with their states constantly working to solve the problems of bringing the skilled workers into our globally competitive firms. At the end of the day, in order for us to increase our competitiveness at the global scale and increase the volume of trade coming out of our economy, we need to, again, empower those leaders on the ground who are constantly integrating innovation, infrastructure, skills in support of higher volume trade. In the last couple of years, a number of cities and metropolitan areas have begun to undertake proactive regional export strategies that are tailored to their unique industry strengths. These are places like Minneapolis, St. Paul, Greater Portland area, Syracuse, Central New York, and the Los Angeles region. These regions are in the process of undertaking export plans and proving that they can help federal and state leaders meet their export goals. What we have called for is a new federal program that begins to enable more metropolitan areas to plan and implement these customized export strategies. The program is called REACH, Regional Export Accelerator Challenge Grant. This is just a modest $25 million 3-year program, a temporary program, to give city and regional leaders and their public and private sector partners a carrot to build up the capacity to help companies and their other partners to participate in global trade, and over time, city and regional leaders will take on this responsibility on their own. So this is not a permanent program, but a very modest temporary program that will have, I think, really systemic change in the long term.